Hello, my name is Fred Berger, and I'm here to talk about life settlements, which is a really hidden asset. The life insurance policy is a hidden asset that you don't realize that can create cash for you. Senior market there's is huge. There's 38 million life insurance policies out there with over $3 trillion of death benefits. There's whole life policies, universal life policies, variable universal life policies, all sorts of different policies that are owned by seniors in very large amounts. The senior population is going from 2012 from 42 million and is estimated to be 70 million by 2030, which is just a couple more years away. Did you know, according to the Studies Institute, more than half a million seniors lapse their life insurance policies annually? Only 1,250 take advantage of life insurance settlements. Another 2 million cash in their policies for the cash values, which is very often less than what they could get if they sold their policies. The studies show that 90% of seniors report that if they had known about life insurance settlements, that they would have certainly considered that as an option. Uh, 9 out of 10 seniors will lapse and surrender their life insurance policies for less than what they're worth. The seniors that have lapsed their policies in 2023, many of them could have qualified for life settlements. On the average, a life settlement broker like myself can generate 4 to 5 times more than the client could simply get by surrendering their policies with the insurance company. What is a life insurance settlement? A life insurance settlement is a financial transaction in which a policy owner sells an unwanted or unneeded, unaffordable life insurance policy to a third party, an institutional buyer. The policy owner receives cash, which is what they can do whatever they want to do with that cash. And the policy owner also saves by no longer having to pay premiums in the future. The buyer of the policy becomes the new owner and the beneficiary of the policy and is responsible for all subsequent premium payments, but also gets a death benefit. Who are the institutional buyers? Well, you have buyers like Warren Buffett and other venture capitalists that are big time money spenders. That's a big opportunity for them to make money. What are some of the common reasons why people have life settlements? Well, one is term policies or have riders that are about to expire. They'll lose their conversion privilege, or they come to the end of their current premium guarantees. If they have a 20-year term, maybe the end of the 20 years are ending, and then the premiums are going to go up, or they're going to lose a life insurance policy. As long as it's still convertible, it could be used as a life settlement. A policy which is no longer affordable because of the policy's performance. Some of the older universal life policies may not be affordable anymore because the premiums have gone up because of the way the economy has been, the marketplace, and it's created an opportunity that you can't afford the policy anymore going in the future, and you don't want it. So a life settlement may be a good option for them. Just retirement. Sometimes people say, I don't need this life insurance anymore. I'm retired. I don't have the responsibilities of family and children and other reasons for that life insurance policy. You sell business or other illiquid assets. These are opportunities to get out of the need for a life insurance policy. And business owners very often don't realize that they have a term policy that or another type of policy that's been paid for by the company, and maybe that's something that needs to be sold as the life settlement. Decline in estate value. The estate tax laws keep changing, and what you had bought several years ago to pay for estate taxes is no longer needed because you don't have estate taxes. So that may be an opportunity to sell your policy that's no longer needed. Or you have chronic illness and or long-term care expenses that are going to take place, and you need money and cash to help pay for those needs. What are some of the types of life insurance policies that can qualify for life settlements? One favorite one is a guaranteed universal life policy. Just normal, regular universal life policies and index universal life policies are very popular. There's reasons for their attractiveness because usually the premiums, if it's done properly, are attractive for the institutional buyers because they're going to have to still pay the premiums in the future and they want to make sure that it's attractive to them. Term policies that are no longer needed, but they're still convertible. As I mentioned, estate taxes, second to die policies were a popular life insurance policy that was sold to take care of estate taxes. If the estate taxes keep changing, you may not need that life insurance coverage for the estate taxes. So they may be an opportunity to sell those policies. Whole life policies are actually very attractive, but they can't have too much cash value. That's one thing that probably makes them less cash attractive than others. But let's take a look at any opportunities that you have there. I'll give you an example of a case that I had fairly recently. It was a 74-year-old gentleman who had $1 million life insurance policy. He had some cardiac medical issues, but had a life expectancy of 10 to 12 years. Uh, he transferred his policy to his ex-wife, but she could not afford the $15,000 a year annual premium. There was no cash value. There's no values in the policy, even though it was a universal life policy. If she had let the policy lapse because she couldn't afford the premiums, she would have received $0. The owner wanted us to sell the policy. With the initial offers were 65,000, which would have been fine. Though through our life settlement auction process, we ended up selling the policy for $190,000. That's $190,000 that she received instead of zero. Now, not all policies and life settlements will end up with the same result, but it's very possible. How can you use the proceeds of life settlement? Well, you can supplement income or fund investments, funding long by the time you get to this age that you're going to use life settlements. You may be funding life insurance, long-term care insurance options that are possible. May have to pay medical bills or just plain lower your debt so that you don't have that burden of debt on you. May want to just have fun things like travel or improving your home. You could also provide educational funds for your children, grandchildren, or great grandchildren. Uh, uh, you can create funds for charitable giving, and also you can create, if you decide you want to start your own business, a business opportunity. But bottom line is anything. The funds are not restricted, unrestricted, and you can use it for any way you want to. A little background about life settlements. It goes back to 1911. There was a Supreme Court ruling which basically said life insurance is an asset that can be bought and sold, just like a house or any other asset that you have. It really came to light, life settlements came to light with the AIDS epidemic because people were had life insurance, but they needed to have a way of selling their policies because they needed the money now while they were still alive to pay for medical care to take care of the AIDS. So that was sort of like the beginnings of today's selling of the life insurance policies. It's taken a while, but over the years, back in 1995, there's only 3 states that did the regulations. Now you have 46 states and Puerto Rico that have them. And there's a huge amount of money that is sold. There's 2.4 billion sold annually. There's even 7 states that require insurance companies to disclose options if you lapse or surrender their policies. What are the sources to sell a policy? Well, there are companies that You can turn on TV and you see direct with the life insurance settlement companies like Coventry or Abacus. Uh, and you may be well to do that if you don't have a licensed professional life insurance broker. Uh, but the advantage of a licensed broker is that we take things to auction and gives you an opportunity to uh, get more money than you would if you're just going to one place, the first place you go to. So the life insurance broker, if they've done it well, will get the best value for your life insurance. Are there any negatives? Well, there are taxes that may be paid. Generally speaking, the premiums you paid for your tax for your insurance in the past is what's called cost basis, and you don't have to pay taxes in that part. If you have a permanent policy, universal life policy that has created cash values over and above that, there may be regular income. But anything over that is generally taxed as capital gains. So taxes are usually not the big part of it, but it's consideration. A lot of insurance companies won't allow you to get new life insurance if you've had a life settlement. So that may be something. If you're applying for government aids, there may be reductions if you have too much assets. California has just recently changed some of their Medi-Cal standards and not putting limitations, but a lot of states still do have limitations of how much you can have own in order to get some of the government funding things. And once you get the life settlement, it's not protected against creditor. This is a calculation that I can do in probably a minute to find out what the values are, potential values. And in this case, there's a $10 million policy. The person's 75 years old. And if they're healthy, we maybe get $43,000 from it. If they're slightly impaired, 95,000. If they're more ill, it may be 150,000. Or if they're more impaired, $250,000. Now that's money that you would not have normally had if you surrendered the policies or lapsed the policies. What's the process? Well, there's I consider three steps. The first part, you and the life settlement broker take the application, they get a copy of the policy, and do an in-force illustration to age 105. That's what the life settlement companies are going to be looking at. And the next step that they do is they get medical records. And then with the medical records and everything, they secure multiple life expectancy calculations to determine whether you fit the profiles that they want to have. And then they send it out for review and possibly auction so that it goes to multiple people that are institutional buyers so that we can get the best quote. Once that's all done, we create an offer of cash. There's other things that can be done. If you still need some life insurance, there's ways of doing that. But generally speaking, most people just want cash. The last step is you accept the offer. It's an escrow process. Everybody has to sign off on it. If there's anybody that has any interest in the policy at all, and then you get the cash and you can spend it the way you want to spend it. So you get cash for your life insurance policies you no longer need and you no longer can afford. You can purchase long-term care, pay medical bills, pay off home mortgages, just travel, just have fun. So the key is we can do better than if you surrender or cash in the policy or lapse the policy. So let's just talk and find out if we can help you. There's no cost to that to find out what we can do for you. I'd love to help you, and that's what I'm here for. Thank you and have a great day.